Hey, this is Clint with Rent Like a Pro. In this video, we're going to talk about taxes. Not the bad ones you have to pay, but the advantages you can use as a landlord. As a landlord and a human, we all hate taxes. Of course we do, right? Well, if you set it up right, you should know that real estate has a lot of tax advantages. So we're going to show you how to set this up right from the beginning. Remember, your property is a business, so you want to treat it like one. Here's a few tips to getting set up in the right place. First, make sure you're using separate books or a tracking system or even bank account for all your expenses. Second, track every single expense you have related to taking care of your property. Everything. And third, unless you're an accountant, use one and consult with one throughout the year while managing your rental properties. Here's your Rent Like a Pro insider tip. Tracking expenses is key. Get a separate debit card or credit card so you can keep them all separate and run them through one thing. I like to run all of my expenses through the same account on the same card, so that's all easy to hand over the accountant. It saves me time with my accountant as well, which is also money. Pros track everything, but we also keep it simple. There's a lot of good apps and websites out there for tracking expenses. I've even got one where I snap pictures of my receipts, things like that, right on my cell phone, tracking every single expense related to the property. Rental real estate provides more tax advantages than almost any other investment. And these advantages can be the difference between cash flow positive and cash flow negative. You're probably realizing that it's the little things that make you money in this business. So let's go over the best tax advantages right now. Interest, depreciation, repairs, materials and supplies, local travel, long distance travel, home office, employees and independent contractors, casualty and theft losses, insurance, and legal and professional services. When I first started out, there was a one-bedroom apartment in one of the fourplexes I had, where the tenant had moved out, and I'd recently bought this fourplex within the last year, so there was no deposit money or anything else. So I thought, well, so I had to pay for carpet cleaning. Obviously now, the tenants move out, they pay for carpet cleaning, whatever. So I'm like, oh, I'm not paying for a carpet cleaner to go over there. It was like $80 at the time, right? I went to the grocery store and I rented a machine for like $45. I had to go there, pick it up, had to buy the chemicals. I was about $60 into this machine. Took it over the place, started cleaning the cars myself. This guy had pets. It was disgusting. It took me about 2.5 hours. Water was getting everywhere. Just complete mess of a place. I feel bad for whoever had to use that carpet cleaner next. I probably, after returning it, picking it up, everything else, I had $60 into it and about 2.5 or 3 hours into this machine. Well, I found out later that your time as a landlord or my time for the carpet cleaning is not deductible. But if I hired the carpet cleaner for $80, that is a deductible expense. Where in this case, I can only deduct the rental of the carpet cleaner and maybe the gas to drive there or something. So by spending 3 hours over there and dealing with a bunch of hair and just disgusting stuff, I saved about $20. You can deduct the value of your own time if you have set up a business ownership of the property and pay yourself a wage, in which case you would have to claim income in order to take a deduction. You want to make sure you're taking full advantage of all the tax benefits available to you.